Welcome to Markets Now. I'm Michelle Rourke with Randy Martinson Ag, and we're seeing kind of a mixed trade in the grains with livestock futures to the plus side. Randy, let's start off talking about corn because we went up, challenged some resistance areas this week, and we're kind of consolidating under those levels, aren't we?
We are. I mean, we saw the market, from the numbers from the report on Tuesday, the grain corn jumped pretty good. I mean, we saw a really strong performance on Tuesday and went traded up against some strong resistance at 450 level. That also was a level that brought out a lot of farmer selling. So we saw an increase in farmer selling, which, kind of pulled the market off the high. And then we saw some technical selling step in behind it, because we weren't able to cross over that 450 level. So right now, that's kind of the line in the sand. If we can get above that, I think we got a chance to see corn push a little bit more, but it's going to be a tough, especially with thin light news at this point, to get above that level and hold it.
Yeah, what would it take to get above that level? What news do you think?
Oh, we'd have to see something as far as maybe some weather issue in Argentina. Right now they're talking warm and dry, but there's some waffling in as far as the weather forecast for Argentina at this point. Or it would take some strong demand. Either somebody coming in and buying a big chunk of U.S. corn would help. But those are the two, really, right now, the only two things that could help push us at this point.
Yeah, and demand has actually been good with ethanol grind on corn, and as well, I think exports are 29% ahead of a year ago. But again, that's just not enough to get us through these areas, huh?
It's not. You would think that, because of the increase in the exports in the report on Tuesday and the fact that our ending stocks estimate for corn is now below last year
Right.
ending stocks, that's a friendly note, but we need something to help push it. And right now the news is pretty thin and we're just not seeing it to be able to catapult it above that 450 level at this point.
Okay, well, we'll hold out hope for that eventually to get above those levels. Meanwhile, one of the anchors that we've had is the fact that there's been some bearishness about the soybean market and the big South American crop coming. So we were up for 3 days in beans. We're back down here this morning. Is that just some profit taking, or is that weather in South America? What's going on there today?
Well, the weather continues to be good. I mean, they're talking about some dry areas, the dry weather now moving into the center south part of Brazil, which has seen some flooding. So that's a little bit negative. We continue to see some demand. Yesterday, we had a flash sale. Today, we had another flash sale for soybeans for the U.S. So that is supportive, but it just, I think the weather and the fact that that crop continues to grow in South America continues to put pressure on.
Yeah, some have been holding out hope that Argentina is going to turn dry. I know that's maybe more of a help for the corn market than beans, but it still does impact the soybean balance sheets. But right now, it looks like there might be some forecasted rain in the extended models for Argentina.
Yeah, right now they are putting a little bit of rain in the forecast for Argentina. We'll see if that develops and if that happens, but that certainly would change the forecast that we've been expecting, and that is a hot and dry forecast for Argentina for the last half of December.
The other thing that I'm wondering if we're trading is we've had a lot of news out of China about stimulus that they were supposed to be throwing at the market or the economy this week, but we're kind of getting some signals that whatever they've done so far is not working.
It hasn't been. You look at their economy, and they continue to see the gross domestic product drop, and we're not seeing the loans that they were expecting to do. So it seems like, yeah, that whatever they've tried to do hasn't really caught on and hasn't really helped to improve the economy at all. And we do have that threat of tariffs coming into place here, on January 20th as well. So I think all that is adding to a little bit of the concern as far as the soybeans are, as far as the soybean market.
Yeah, and apparently China is trying to devalue their yuan before the tariffs come into place. And now Trump said, hey, if you do that, we're going to throw more tariffs at you.
Well, exactly. So I mean, you can't fault China for wanting to try to be proactive, but it's likely that Trump has had a little bit of trouble with China, and he is, I think, pushing the envelope a little bit. His first thought was to put tariffs on of it 60%, but he did back off and only looking at increasing it to 25, like he was talking about for Mexico and for Canada. But he does have that ability to move up to that 60 that he first threatened.
Yeah, no doubt. Let's also talk about the wheat market this morning because wheat was lower yesterday. Is it just following corn at this point? I mean, they're kind of feeding into each other, aren't they?
They are, and I think yesterday's export sales number being a little disappointing kind of added added a little pressure into the wheat market. But for the most part, yeah, we're kind of trying to feed off each other because, like I said, the news is thin, the trading ranges are tight, so they're kind of feeding off each other. Right now, corn and wheat are going to be somewhat tied together as one's going to pull the other in the direction. So, we do have some friendliness for wheat, but we just need to get that export market moving a little bit more, and that would certainly help.
Yeah, we're hearing a lot of information, as you mentioned, out of Russia about their lower crop, maybe lower export quota, a higher export tax. Is the market respecting that, do you think, at all this point?
Well, I think they did. I mean, when that news first came out, we did see a little bit of a bump in the U.S. market, for the wheat, but then Russia tried to walk it back pretty quick by saying, that those weather forecasts really aren't that accurate. They're only done twice a year. So they actually were trying to back away from some of that news. It tells us that maybe it has a little bit more truth to it than normal, but their crop is in a little bit of rough shape, and it's likely that their exports are going to dwindle a little bit. And hopefully that means that the U.S. can get in and participate in that export market a little bit more.
Okay. Wheat is trying to bounce a little this morning. I know funds are short, so maybe a little short covering there, but really soybeans and wheat, just like corn, kind of ran up into some chart resistance, didn't they?
It did. One thing, I watched the Minneapolis market a little more than Chicago or Kansas City, but Minneapolis was able to trade above that $6 resistance line and has held above it in the March contract. So technically, we are seeing a little bit better performance for the Minneapolis side, but we're not doing any runaway. We're just kind of holding our own.
Yeah, and soybeans, $10 eludes us in the January, doesn't it?
It does. That's a pretty strong level right now. If we can get above that, I think we could see a 1040, but it's going to be tough to stay above that level here at this point, especially with the idea that South America is going to be harvesting their beans pretty soon, and then we'll start to see exports switch over to them.
Yeah, that'll happen right after the first of the year. So the cattle market, it's been a little bit of a roller coaster ride here. Yesterday was interesting. You threw a lot of positive news. In fact, sharply higher cash and cutout values at the market. And yet we kind of failed. Today we're trying to recover. So today's close is going to be pretty important, isn't it?
It's going to be very important. Yeah. Yesterday, I think we did see some profit taking, some technical selling as we got up to some pretty strong levels. I think it was kind of, we were buying the rumor up until yesterday with the higher cash, and then we sold the fact that we did see the higher cash. So I think that, right now, if we can finish higher today, that's going to basically negate yesterday's issues. And we'll see this market I think continue to have some strength. There are some technical levels, I think, like the feeder cattle market and the live cattle market are going to try to trade to, but it's all going to be dependent on what happens when the opening of the border with Mexico.
Right. And we're hearing this morning, nothing confirmed, but that we could get some at least direction on that here through the end by the end of the day, maybe.
That seems to be the story, is that by the end of the day, we'll have a date on when the border is going to open. And, and once it does, we expect to see a pretty good flow of cattle coming across the border, especially, with the pent up supply that has been waiting to come across since the border was closed. And then also, I think there's going to be some extra cattle being pulled ahead just to get ahead of the January 20th inauguration, which could lead to tariffs against Mexico.
Yeah. I think the market might be anticipating that. We'll see if it actually comes true or whether it's just a threat. Okay, the hog market, we'll just wrap up on that. Hogs have consolidated under the highs, but the funds are still near to record long. Do they keep defending that position or not, Randy?
For now, they seem like they have been, just like in the cattle, we had a little bit of a pullback, cleaning up, you might say, but yet the market still seems to be able to stay strong. At this point, until they have a reason to start unwinding their long positions, I think they're going to stay long and keep pushing the market.
Okay, all right, thanks so much. Randy Martinson with Martinson Ag. That is Markets Now.